You. All right. Good morning, everyone. Happy Wednesday. Hope the week has been good to you so far. But we will get jumping in here. We got two trades on the books, both of which we opened up yesterday, one being Apple and the other one being Kroger. So for Kroger here, I got your classic daily squeeze setup. We have the white arrow. And then I think I mentioned this back on Monday morning, but I'm working on a few updates here on the indicators. So down here on the histogram, if we get a green arrow, that's your A plus squeeze. Pretty much it right what I think is a sweet spot for a good entry. So you've got your green arrow, got the green label, good squeeze, good entry. So for Kroger, we bought the August expiration 70 calls. Delta, I think Delta 70-ish. Looking for a move here into 75 and change, and we are wrong back below 71-ish. So we got that bad boy going, and I think there's a weekly squeeze here too. The more the merrier. And yeah, weekly squeeze with your green arrow. So we got some Kroger, and then for the Apple here, Apple had a really nice hourly squeeze back on, I think it was Friday of last week. Yeah, back on last Friday. So that was my last vacation trade. And then caught the gap up, took the profit. And then for yesterday's close, in terms of an end of day setup, pretty good stuff here. 30-minute squeeze, green arrow. All of your trend, momentum, the structure. 15-minute squeeze, green arrow. Then to top it off, you had a 5-minute squeeze also with your green arrow. So for Apple, we jumped into the 215 calls for the Friday expiration. And I think they popped the call wall from 215 to 220. Let's go confirm such things. All right, what do we have here? S&Ps, your call wall goes into 6,500. QQQ, no changes, 570 call wall, 555 on the put wall, and the Apple call wall pops from 215 into the 220. But they got to deal with 215 first. So at the moment, looking like a gap into, if they can stick the landing, of course, looking like a gap into 215.80-ish. So in terms of a shorter term trade, those calls expire Friday. For one, they expire Friday. Then we got to get through Tesla earnings, got to get through Google earnings. Looking at it, if they can get through these recent highs around 216 and change, might be very much dependent on Google and Tesla. But yeah, if they can get through those short-term highs, this might have room to run. And if you look at your 4-hour squeeze, I think the bigger trade here is getting a white or a green arrow on the 4-hour chart. Then you try to take that 4-hour squeeze closer to 219, 220, with your brand new call wall being 220. But for our trade, I'm thinking if you can catch a good, strong gap up, we can maybe think about taking the profit on the 215s for Friday. Got to factor in for the 30-minute squeeze, your target's basically 216. But yeah, we'll see where things open depending on the profit. Could be something where, for the sake of conversation, you bought the call yesterday. You catch the gap in the pump here at the open. You've got, call it, $1,000 of open profit. But at the same time, you got earnings coming up. It's a shorter dated option. We could think about taking the $1,000 of profit, right, put it in the bank, and then you're maybe taking $100 of it, 200, 250 of it, and then you're looking at something like a 220 call for next week. All right, I caught the pop. I'm going to book my $1,000 of profit. I can then immediately turn around, call it $200, and I'm buying a few of these. Depending on the price of the option, of course, you maybe got to do a butterfly, do a debit spread. But the idea being maybe you bank the short-term profit, then you go and parlay a little bit of it. So we'll see what's up here for the Apple and the Kroger. But otherwise, guys, if we go spend a few minutes here on the spreadsheet checking out the rankings, One little observation from last night. The QQQ has gone from your strongest sector to your quote-unquote weakest sector. We've got the RSP at 98% of its best score, and then Dow Jones at 93, the S&P's at 90, the Russell at 87, and the QQQ at 71. Think of a cell phone. If your cell phone has 71% of its full charge, it's not too bad, right? You got something to work with, but you also don't got all the full juice. Your RSP, your Dow Jones, your S&Ps, they're a little bit closer to having the full juice. Could, of course, change after earnings. And then checking out a few of these bigger QQQ names. Netflix goes a little bit negative, more neutral. We've got a neutral meta rather. Little flush in your semis yesterday. TSM pulls back, Nvidia pulls back, and the Broadcom pulls back. Little cool off here for Microsoft. Apple's getting stronger, and Tesla, Amazon, the Google, all looking pretty sharp. Then you look over here. If you look for XLK, XLK drops down to number 14 for the sectors. And again, it's on a bad score. You're at 63%. But the context is you've gone from, I think, 100% maybe a week ago down to 63. We've got the SMH. They've gone from 90, 95, 100 down to 48%. Healthcare is pretty trashy. Energy pretty trashy. So who's good here? Your strongest sectors right now are utilities. You got silver, XLY, the Bitcoin. We've got some gold, communications, financials, XLB, real estate, and the transports. So kind of a short-term case of, all right, they wake up and they go sell Nvidia, they sell some Broadcom, they're dumping the SMH, they're selling the Microsoft, they sell the Amazons, and then they're going and buying the utilities. They're buying SO, they're buying silver, Kroger, XLY, Citigroup. Now, one might think, all right, that's cool and all. We should just go and buy some XLU, FAST, etc., which on paper I think is the right idea. Get long inside of relative strength. But here's the tricky thing about all that. If we look at the XLU, for example, could it keep going? Yeah. But do I look at that chart and think I've missed the ideal entry? Yeah, I'm really late. Ideal entry being squeeze, perfect score of 15 in your green arrow. So I'm not trying to chase that one. I'm not trying to chase the SOs of the world. Again, all beautiful moves here. Here is your Citigroup, moving and grooving, FAST. Excuse me, but that's what I do like about Kroger. Kroger finishes up yesterday at 99% of its strongest possible score. And better yet, I'm finding that relative strength with a really good squeeze entry. We like that. So yeah, guys, all that being said, again, I spent some time last night going through the top 10. And for a good swing trade entry, it's Kroger. If you're out there trying to find a day trade entry, a short-term trade, it could be any of those guys on a 15-minute squeeze, a 30-minute, an hourly. And then pretty much the same thing here for your top 20. Duke, GLD, Booking.com, the Google, O'Reilly, AEP. And then I think the bigger thing here would be, let me show you guys a couple of things on the Nasdaq Futures. The context being on the index rankings, QQQ's gone from first to last. In last place with a good overall score. But a couple of things here on the futures. And you got to keep in mind, there's a big difference between signs of exhaustion and, oh my God, things are bearish. What I'm seeing right now in the QQQ futures are signs of exhaustion. Doesn't mean I'm waking up and I'm buying a bunch of puts. Exhaustion being, for one, you had the easy part of the move. And I think such a big part of trading is really identifying that moment in time. All right, here's your index. Compression in your daily squeeze. Really bullish on your white arrow. It's a great thing for the QQQ. It can be a great thing for most names out there. They break out the index, they pump it, you get a few weeks of good wind at your back. You're out there buying the Apples, buying the Nvidias, Googles, etc. The entire game gets that much easier. Daily squeeze, break it out, squeeze fires, easy part of the push. You want to be a little bit more aggressive, push your size, push everything. Within reason, of course. And then at some point after the quote unquote easy part of that push, you get your signs of exhaustion. Again, not hey, things are bearish, a little bit more hey, things are tired. And to me, that looks like we're losing our buy triggers. So over here on the labels, we are blue on a daily down to a 5. Blue's neutral. None of them weak enough for a sell trigger, none of them bullish enough for a buy trigger. And what can happen is after you make that push away from your 21 EMA, when you get signs of exhaustion, at some point that can kick off that reversion to the mean. You rally away from your 21, you pull back to it. Rally away from it, you pull back to it. Now, what I think causes gives us reason to be a little bit more patient. Again, could all change after Google, could all change after Tesla, but for the first time since the May 13th candle, we're losing our daily buy signal. Reason being, if you look down here at the MACD bars, for the first time since late April, they're trying to get that shift back below the zero line. So kind of talking out loud, here's what I think could happen. Could, of course, be dead wrong. But I think maybe a few things out there in that big, big tech, big SMH space, they could maybe go and pull a Broadcom. And what I mean by that is you get the easy part of the push, you get signs of exhaustion, you pull back towards your rising 21 EMA, and then my favorite part, of course, you then begin to print a brand new daily squeeze. Now, that can be a little bit two-sided for one. That brand new daily squeeze, all your neutral action, that can maybe point towards Broadcom's taking a breather here. Pulls back a bit, maybe spends 2, 3, 4, 5 days going back and forth, chopping in a squeeze. Then you get your 15-minute buy trigger, your 30-minute. Then you go look for your white or your green arrow. So I think if we don't get that immediate breakout on good earnings, could be a similar pattern here for the Qs. All right, little kickback, couple of 15-minute, 5-minute sell triggers, brand new daily squeeze. Then that can maybe set the tone for another leg higher down the road from there. But all things we shall figure out in due time. But all right, guys, that's pretty much what I got for you. I'm long the Apple, I'm long the Kroger. Gonna get through earnings and taking it day by day for now. So anything you guys and gals got, put it in the chat. I shall take a look. And then folks in my room, in the main room, I've got you here for the open this morning. All right, got the Apple here, pre-market. Kroger. Where's Tesla pre-market? Flat. Amazon pre-market up about $1. The Google, we'll call that flat. You got Meta at 706 and Microsoft in 2. Pretty much flat. But all right, y'all, whatever you got for me, let me see what you got. Get caught up here. Yeah, good morning. Thanks for all the greetings. Hey, what's up, Gabe? Good to see you, man. Yeah, gold's shaping up here. Yeah, there she blows. All right, so you get that negative cross on your daily MACD back in early May. And you guys will notice that kind of keeps your price pretty contained to a big range. We're back here. You're pushing, you pull back, you push, you pull back, you push. May, June, July has been a lot more. They flush it and they pop it. They flush it again, they pop it. It's a lot of noise, a lot of back and forth. Bigger picture, you're really going nowhere. In comparison to the kind of action you're getting, of course, from back there. So now for the first time since early May, you've got the squeeze, great structure, great trend, and they're finally getting momentum back on the buy side. Kicks off your buy trigger, kicks off the white arrow, and yeah, I like it. Better yet, if we go jump over to the weekly squeeze, we got the dynamic duo, the white, white arrow on the daily and the weekly. This is one of your better looking weekly patterns, I think, in the market. The gold futures here. She's been a bit of a gem. Weekly squeeze, breakout, pullback. Weekly squeeze, breakout, pullback, chop. Weekly squeeze, breakout, pullback, chop. So they went for it 1, 2, 3, 4 times, and they're going to go for their fifth. Target on that would be around 3,600 and change. Anything shaping up here on a lower time frame? Yeah, hourly in a 30. Little give back here into the open. When you find something with a big weekly squeeze behind it, a good looking daily squeeze behind it, they can make for a great swing trading opportunity. From another point of view, they can make for a great day trading opportunity. And what I mean by that is, imagine you're catching gold back here when the weekly squeeze broke out. There's a 4, 5, 6, 8 week window where not every 15-minute, 30-minute hourly squeeze fires long, but a good bulk of them do. Bigger time frame squeeze, bigger time frame breakout. Until that thing loses steam, it'll give your 15-minute squeezes, your 30, your hourly, a lot of that short-term wind at their back. So I think we'll have gold in the rotation for such activities. And then what's up, Josh? Josh T in the building watching VST. Yeah, I think this is one that Woodstock in my room has been watching. All right, I do like your pattern of pump it, pump it, pump it, pull back, chop, brand new squeeze. And now that label over there being white. White means, hey, you've got a squeeze, you got it right where you want it for a good entry. But now we got to get a trigger for a long or a short. And until things change, you're closer to a long trigger than a short. 12 points out of 15 on the scoreboard. The trend is bullish. The structure is bullish. So it's a classic case of great trend, great structure, big squeeze, stacked EMAs. MACD a little bit below zero. So if that can shift back to the buy side, that might go and kick off that breakout you're looking for. All right, and then folks over here in the showcase room. Hey, what's up, Ram? Good morning. Good morning, Lorna. Ram's got SXT and the DraftKings. Another nice pattern here for the SXT. But earnings are going to be on the 25th. So earnings are... That's Friday before the open. If you can catch them on a nice setup, call it 2, 3, 4 weeks before earnings, I like that. I think when we find them 1, 2, 3 days before earnings, that can make it a little tricky. So for example, if I were to look at the 4-hour squeeze here, the goal of that 4-hour squeeze would be to wait for my trigger, jump in, find my spot to get long, and then ideally play for a push towards my 112 and change target. So then the question becomes here in the short term, can I catch that push before the announcement? Unless, of course, the goal is buy it and hold it through earnings. But yeah, overall, I like your pattern here. So it's a great spot to look for the entry. First 15-minute buy trigger, first hourly buy trigger. And then for the DraftKings, speaking of DraftKings, I think today's first day of the NFL training camp. Meaning I got to go knock off the dust on the old DraftKings pretty soon. So here's my experience in sports betting. 2 or 3 years straight. I'll put like $200 in my DraftKings. I'll run the thing up to like $1,000, and then I'll blow it. Reminds me a little bit of my early trading days. Very, very reminiscent. But yeah, DraftKings looks really good here. Daily squeeze, white arrow, 4-hour squeeze, 2-hour, 30, 15, and the 5. Green arrow on the 2-hour, so it's a great entry. And then, yeah, I like it overall. It's pretty clean. Now, what are earnings here for the DraftKings? You have until the 6th of August. Decent little runway. Earnings on August 6th. I think enough time to look for a play off that 2-hour squeeze. But daily squeeze-wise, I like it as well. Good call out. David, does Kroger earnings call on Friday affect the trade? Are you sure earnings are Friday? It looks like earnings were back here on the last quarter, the 20th. Let's see what Toss says. Toss says a lot of nothing at the moment. What's that, a dividend? You know what, David? Thank you for bringing that up. Admittedly, I didn't even check for earnings, which, given the time of year, I think we got to do that for sure. So I'm going to make a note here for myself. We got to go figure out the actual date. The estimate here on Toss is, what did I say, September 11th, but we got to go confirm that. If any of y'all work at Kroger and you're in the know, put it in the chat. But no, if they are on Friday, we might take like a 10% profit and go to Chili's. And if we do that, that might guarantee it's going to $100 after earnings. But yeah, but definitely figure that out. Yahoo Finance has 724. Yeah, no, because it's showing they had it back here in June, so I think we're in good shape. Yeah, never mind. It wouldn't be 1 month apart, but we'll figure it out and confirm for sure. Yeah, I think early September makes a little bit more sense. But all right, guys, I think we're good on the Q&A here, so I shall let you go. Gonna heat up the coffee, and then folks over in the MTT room, folks here in my room, I shall catch you for the open. We got the Kroger, we have the Apple. Where's Apple here? Apple into 220 yet. Apple is at 215.50, so not quite. But all right, guys and gals, as always, thank you for your time. Much appreciated. As far as folks here on YouTube, should have a couple of videos out later tonight and a few more later in the week, so keep an eye out for that. And then the rumor is we're doing a webinar here in, I think, 2 or maybe 3 weeks. So more on that to come and more on the indicator updates to come. But thank you again. Always appreciate it, and we'll talk soon.